Good day and welcome to SCO BRICS Insight, where we look at what's really going on in the world of the BRICS. Now today I want to talk about India and China. Now it's been reported that fellow BRICS founder member India is prepared to enter a long-term contract with Russia for the supply of a very large volume of oil. Moreover, its intention is to conclude this matter as expeditiously as possible. Now, the urgency of this decision may be indicative of India's expectation of a swift resolution to the conflict in the Ukraine and the lifting of European sanctions on Russian oil. So what makes this deal potentially historic? Well, have Russia and India signed or in the process of finalising a long-term contract which has been held? Well, it's indeed worth noting that until 2022, Russia didn't actually trade oil with India at all, and it's now the country's primary oil supplier. I mean, Russia currently supplies approximately 2 million barrels per day to India by sea, and that's around 40% of India's total oil imports. Now, previously, Reuters sources, that oil organisation, indicated that the deal may have already been signed between Rosneft and the Indian oil refinery complex of Reliance Industries in the western state of Gujarat. Now, it's one of the largest refineries in the world, plus it's reported that deliveries under the new deal are scheduled to start as early as the end of January 2025. However, that said, the Business Standard Indian newspaper, citing its sources, claims that the deal hasn't yet been signed. The report says the Indian government plans to expedite the conclusion of a long-term agreement to purchase oil from Russia by the beginning of the next financial year, which begins at the end of April 2025. Now, the discussions have involved a combined group of state-owned oil refineries which are expected to intensify negotiations with Russia in the near future. The official stance of the parties is one of silence, however, Reuters sources have allegedly provided agreement terms, and the agreement is for 10 years and provides for the supply of approximately 500,000 barrels per day. Now, the majority of the supplies will be Urals crude, which will be sold at a price that's around $3 lower than the Dubai grade quotes. Now, however, these prices and volumes are subject to annual review, it's expected. Now, based on the current pricing, the value will be around $13 billion per year, with an estimated value over the term of the 10 years of $130 billion. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund my channel and the website SCOBRICSInsight.com to further develop it. You can do this by making a small donation, which is done by clicking on the thanks button at the bottom of the video screen. Everybody who donates does get a personal thank you from me, and I'm thanking you all now for watching because I do appreciate you viewers. Now please like and share if you do. Share with your friends and help me build up my subscribers. Then the deal has the potential to become one of the largest ever for Russia's oil industry. 500,000 barrels per day represents about 15% of Russia's current seaborne crude exports, and it's equivalent to 0.5% of the global supply of oil. Now, if India is pursuing this long-term agreement and is eager to finalise it, it does suggest that it anticipates that the situation in the Ukraine and the confrontation with the collective West is nearing its conclusion. Now, in the current situation as resolved, some European sanctions could be lifted, allowing Russia to resume oil supplies to Europe. However, that wouldn't be beneficial to India, which would lose the volumes that it's sending there and the profit margins that go with them, according to Igor Ushkov of the Russian National Energy Security Fund. And he's quite right. I mean, India's been making a seriously good margin out of Russian oil and then shipping it on. I think the primary objective for Delhi in the agreement is to ensure the availability of supplies at preferential rates, and that would entail a certain discount, which is obvious. Now, the size of the discount will be a key point, and both sides will negotiate hard. Now, according to Yushkov of the National Energy Fund, he said the Russian side will consider the possibility of the normalisation of Europe with the potential of selling Russian oil to European consumers at a higher price. But there, of course, there's a risk for both parties, given the uncertainty surrounding the end of the conflict in the Ukraine and the lifting of Western sanctions. However, if India did not anticipate the conclusion of the armed conflict, there would be no discussion of a long-term agreement, says the FNB expert, and I tend to agree with them. In regard to the contract price and the discount, it's probable the price will be linked to the benchmark grades of oil with a discount and a certain amount of dollars, with the transportation taken into account. Now, a more complex scheme is possible, with a discount depending on the price corridor when all the benchmark grade oils are changed, and a long-term contract with one of the largest energy companies indicates that despite sanctions, India is committed to a long-term partnership with the Russian companies and the Russian oil sector. Now, this deal is particularly significant for Rosneft, given the advanced level of its Vostok oil project. Prior to 2022, you've got to remember, Russia didn't supply any oil, and the first supplies were delivered in the spring of 2022. The volumes have consistently increased every month. Consequently, by the time the EU sanctions against Russia fully came into force, it had already established the logistics and the delivery services with huge volumes to India. So what factors enable Russia to a strong presence in the Indian market? Well, in India, many oil refineries had been constructed on the Indian coast, and a successful business had been established. Indian refineries initially sourced their oil from the Middle East, with Iraq as one of the primary suppliers. Then Saudi Arabia and the United Emirates became major suppliers. The refineries then processed these different oils and resultant products and sent them off to the international markets. I mean, there's only a small portion of the oil that's processed is actually shipped into the domestic Indian market because it's just not that big compared with the capacity of the Indian refineries. So currently, Indian refineries are processing Russian oil due as discount priced relative to Brent, allowing them to generate additional profits from the sale of oil products made from Russian oil. I mean, India exports its oil product using Russian oil to a number of international markets, including the European Union, the United Kingdom, and the United States of America. And this scheme's not subject to any sanctions. Indian oil products have replaced Russian on the European market, although they are Russian if you look at it logically. Plus, many European refineries are currently underutilised due to the lower cost of purchasing oil products made from Russian oil compared to loading their own refineries. Now, previously there were issues with Russian oil sellers being able to withdraw their rupees from the Indian bank accounts in the banking system. And that's what India used to play. But, I mean, that was because there was no demand for rupees, because Russia doesn't buy a lot of stuff from India. There's only so much curry powder you can buy, isn't there? However, the Russian central bank has now solved this issue and has been addressed by eliminating the rupee and transitioning to the sale of Russian oil to India in yuan, Hong Kong dollars or UAE dirhams. Now, China is also a major buyer of Russian oil with the East Siberian Pacific Ocean Pipeline, the ESPO, delivering oil directly into China. And there's tanker deliveries to major ports. Plus, it's known that some Chinese companies sell the oil on, like the Indians do, to other countries and make a margin. Plus, now Turkey and Brazil have been major importers of Russian marine diesel and gas oil since the EU banned the imports of Russian oil products, and that's from data from the financial firm SLNG. Now, before the EU embargo came in, Europe was actually the biggest buyer of Russian diesel because they just didn't have the capacity to do it themselves. I mean, Russia shipped about 1.7 million tons of low sulfur diesel and gas oil to Turkey in September, and that's up from 1.04 million tons in the previous month. Diesel exports from Russian ports to Brazil rose to 800,000 tons, and that was up from 700,000 tons in August. The traders are noticing increased volumes of Russian diesel heading from ship-to-ship transfers near the Italian ports and around the Greek islands, and that's around 500,000 tons. And it's not really known where they're heading, but we still think that's probably Egypt and North Africa. Now that's because the diesel exports from Russian ports are rising, and that the official ones from Russian ports to places like Libya, Tunisia, Senegal and Egypt, and they are major there. Importers. So overall, Russian seaborne diesel and gas exports keep growing and will continue to grow. So as you can see, it doesn't look like the embargoes that the G7 etc. have worked. So the desperate sanctions haven't worked, and it's all looking good for the Russian oil sector. Now, please, thank you for watching. Please like, share and subscribe. And if you want to help me out, click on the thanks button at the bottom of the screen. Thank you.